Hey everyone, welcome back to Corporate Decoder, the place where we dig into those confusing corporate filings so you don't have to. Today we're looking at a proxy statement from Biotechnology. It sounds like something out of a sci-fi movie, right? Well, this proxy statement is far from fiction, but it might surprise you what you can dig up with it, so buckle up because we're about to decode what's going on behind the scenes. A proxy statement is basically a document that a company sends to its shareholders before a big meeting. It tells them what's on the agenda and how they can vote. This one is about Biotechnology's annual meeting of stockholders. This meeting is happening on June 5, 2025. It will be a virtual meeting. Stockholders need to register ahead of time to attend. One of the main things they'll be voting on is electing 4 Class I directors to the board. These directors will serve a 3-year term all the way to 2028. The nominees are Stephen Howe, Robert Rosiello, Michelle Seitz, and Patrick Yang. They're also asking stockholders to approve the appointment of Ernst & Young as their independent accounting firm for next year. Think of this as giving a thumbs up to the company that checks their financial records. To be elected, the directors just need to get more votes than anyone else. For the accounting firm, they need a majority of votes in favour. Let's dive into who these director nominees are. Stephen Howe is already the president and CEO of Sonar, so he's deeply involved in the company. Robert Rosiello has experience at Flagship Pioneering, a company that creates new bi-platform companies. He also used to be an executive at McKinsey, a consulting firm. Michelle Seitz runs a private investment firm. She was the CEO of Russell Investments. She also sits on the board of MSCI, a financial services company. Patrick Yang is a co-founder of National Resilience, a biomanufacturing company. He used to be an executive at Juno Therapeutics and Roche, 2 big names in healthcare. The board has to have independent directors. That means people who don't have a conflict of interest. The board decided that most of their directors are independent except for Stephen Howe, the CEO, and Richard Mulligan, who used to work for the company. The audit committee makes sure the company's finances are in order. They oversee the accounting firm, review financial statements, and manage risks. The compensation committee decides how much the executives get paid. They also look at the company's human capital management, making sure there are good strategies for talent and diversity. The Nominating and Corporate Governance Committee finds people to be on the board. They also work on corporate governance guidelines, making sure the company is run well. The board also keeps an eye on risks. They get reports from management about potential problems and make sure the company has plans to deal with them. Now, let's talk about executive pay. This proxy statement tells us how much the top executives made. In 2024, CEO Stephen Howe made almost $8.8 million. This includes his salary, stock awards, and bonus. Bernard Cassidy, the general counsel, made about $2 to $3 million. These numbers include salary, stocks, and bonuses. Nathan Hardy, the former CFO, made just over $3 million before leaving the company. Douglas Williams made $2.7 million before leaving the company. A big part of executive pay is based on performance. The executives get bonuses if the company hits certain goals. They also get stock options and restricted stock units. These are like bets that the company will do well in the future. If the stock price goes up, they make money. The company has plans to pay executives if they get fired or if the company is sold. This is to protect them if things change. If Bernard Cassidy gets terminated without cause or resigns for good reason, he gets 9 months of salary and health coverage. When Douglas Williams left, he got payments for transition services and COBRA coverage. As of the end of 2024, the executives still held a lot of unexercised stock options. This means they have the right to buy shares in the future at a set price. If the stock price goes up, they will make profit. The non-employee directors also get paid for their service. They get a base retainer and extra pay for being on committees. They also get stock options. The last main item is about the accounting firm. The board wants stockholders to approve Ernst & Young as their independent registered public accounting firm. In 2024, Sana paid Ernst & Young about $1.6 million for audit and tax services. Companies have to disclose any deals they do with related parties, like executives or major stockholders. Sana has a policy to review these transactions to make sure they're fair. Recently, some major stockholders bought shares in a follow-on offering. This included entities affiliated with Arch Venture Partner and Flagship Pioneering funds. Sana has a license agreement with Beam Therapeutics. One of Sana's directors, Robert Nelson, has connections to Beam, so this is considered a related person transaction. This section tells us who owns the most stock in Sana. Arch Venture Partners and Flagship Pioneering funds are the biggest holders. CEO Stephen Howe also owns a significant chunk. Sana has a plan to issue more stock in the future through equity compensation plans. This is how they give stock options and restricted stock to employees and directors. Okay, so what does all of this mean? Sana Biotechnology is a company with a lot of moving parts. They're trying to develop new cell therapies, and they have a lot of important people involved, from the executives to the directors to the major stockholders. The high executive compensation shows that they are trying to get the best people, while the related person transactions raise questions of objectivity, and the low insider ownership means executives don't have skin in the game. The company has some challenges. They have to make sure they're managing risks well, especially when it comes to corporate governance and executive pay. They also need to keep their key people happy so they don't leave. Overall, Sana Biotechnology is a company with potential, but they need to keep a close eye on their governance and finances. Thanks for tuning in to Corporate Decoder. If you found this helpful, give us a like, drop a comment and subscribe for more deep dives into the world of corporate filings.